Welcome back to Fast Market here on the Schwab Network. Let's bring in our next guest for our cash tag segment. That's going to be Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. It's great to be here.
All right, so we're talking Airbnb. It was a pretty choppy trade in 2023, Landon, but had a decent year, up nearly 60%. They grew revenue 18% last quarter. Gross bookings were up 17%. It seems like things are going well for Airbnb at this point because people are still wanting experiences and travel. Do you have the data that supports the moves, or are we expected to see more volatility perhaps in this name?
Yeah, I tell you what, I mean, they were up in 2023, the stock, but if you look at that chart, I mean, most of it was in the early year, and then it was very choppy, as you said, up and down. And if you contrast that to the hotels, Hyatt, Hilton, Marriott, you can see a big difference in those stock charts. And I think a lot of it has to do with the novelty wearing off. And people are maybe just getting a little more frustrated with some of the experience at Airbnb. I mean, you can see it in the happiness levels here. It's very, very clear, the different models. Hilton's doing a decent job. Hyatt's fantastic. Marriott's doing well. And then Airbnb is just on a completely different level. So the fact that you've got these outrageous cleaning fees, you've got instructions from the owner on how to wash the dishes and set the thermostat when you leave and put the sheets in the washer and do all these different things, versus a hotel, you show up and you leave. I think people are realizing the novelty has worn off, and for a 1 or 2 or 3 night stay, a hotel's a no-brainer. If you're going for a week and it's something on the mountain or on the beach, then maybe you go Airbnb. But I think that a lot of the sentiment has sort of turned on Airbnb, and you can see it there in those numbers. You can see it in the stock price. So they did report strong earnings growth, strong revenue growth on a year-over-year basis, like you talked about. I think it was maybe 17, 18%. The number of nights and experiences was only up 14%. So what's interesting there is that they're gaining more from fees and less from the user, or less from the renter, if you will, and more from the fees and things like that, which I think honestly it's the wrong direction. But they're focusing on international expansion. When you look at the data though, it's decelerating. We've got them at -6 on a year-over-year basis on mentions, but -22 on a 30-day basis. So obviously it's going in the wrong direction. Web visits are down 8% on a year-over-year basis, and this is sort of the slow time of the year anyway. But it's you can see it that the year-over-year is not when people usually rent Airbnbs. It makes sense. You take more trips in the summer, but it shouldn't be lower on a year-over-year basis unless there's something moving in the wrong direction. That's what we see. So I think that they've got some tailwinds that they're not taking advantage of. I mean, we've seen strong numbers from TSA, travel's up. You've seen, you take a look at any one of the hotel stocks, they're doing really, really well. That usually they're at 52-week highs. And Airbnb is just not participating in this, sort of travel resurgence. We've seen that, consumers are very, very picky about where they put their discretionary funds, but they're choosing experiences and travel right now, and Airbnb is not taking advantage of it. They talked about broad-based weakness in their last report, but that's weakness for their model, not for travel. So I really think that they need to make some changes, either the international expansion and become a novelty there for the next few years. But I think for the long term, this company needs to make some kind of change to their model to be more competitive with hotels, and grab more of those travel dollars, because I just don't think what they have right now is working.
All right, Landon, let's get into this. All right, because here's where I think LikeFolio's data is not. I don't think you can compare Airbnb to Hilton or Marriott or Hyatt. Here's why. Their asset-light model, they're a booking service. That's all they are. They don't own any of these companies. They don't own any of these properties. They are a cash flow machine. 38% of their revenue goes to free cash flow. You're right. The comparison between a hotel and an Airbnb is really, it's apples and oranges if you ask me. Shouldn't we be comparing Airbnb to, say, Expedia or some of the other booking companies like that? Because I I don't think a hotel experience is the same as an Airbnb, frankly.
It's not, but I think that for the consumer, it is a choice, right? It's a choice between those two things. So from a business model, absolutely, I agree. One has assets, one doesn't. It's a very, very different. I mean, we're talking about Uber for houses here, right? It's a very cool model in that they can just extract money from the market, play middleman, and it's just all software based. I totally get it. Now, when you look at Expedia, you can pull up that stock chart and you can see how well they're doing. Incidentally, though, VVRO, owned by Expedia, is doing worse than Airbnb on our data. So Expedia, again, they're middling here. They're being the middleman, but they're doing it for the experience that the consumers seem to want, which is, again, the hotel experience, the more traditional experience. So I just think that from the consumer's mind, it is a choice between Airbnb and the hotel, even though the business model from the investor's mind is completely different. So for me, I'm very consumer sentiment focused, obviously at LikeFolio. That's what we look at. What does the consumer like? If you want to get into the fundamentals of the company, talk about assets, I totally get it. It's a completely different company. But for me, I think that consumers are clearly telling the market that they are choosing when they go on vacation or when they travel, that they're choosing the traditional model of the hotel. And over time, that's going to erode the strength of Airbnb's asset-light model, which obviously, for a guy like me, that's a superior model. I love no assets. I love just, taking a little bit from both sides of the transaction. Fantastic. But if we see this trend continue, it's going to be worse and worse for Airbnb over time. And again, fundamentally, two different types of companies, apples and oranges. But for the consumer, it's apples and apples. It's where am I staying tonight? Where am I staying next week? Where am I staying when I go on vacation? And that choice for what the data shows us, as you can see in this line here, the data is going the wrong way for Airbnb.
Yeah, see, your customer happiness bar chart here, Landon, I actually like it because I am of that aspect where I don't even look at Airbnb anymore when I travel. I look strictly at hotels. I know what to expect. I can build points. There's a bar down at the bottom. There's a restaurant. Everything is there for you, and it seems like that's what the consumer's looking for at this point. But when you look at the stock price versus that asset-light model, the growth that they've had, they rely on having more Airbnbs. When interest rates were at zero, right, you can get a loan for a place for 3-4%. A lot of people were opening new Airbnbs, buying second properties, using those. Is that drying up also? And then on top of that, all the fees and the cleaning stuff. People are just tired of that extra thing. Even though hotels, there's taxes and stuff like that and resort fees, but it just seems like people are tired of it, and maybe that's why we're not seeing the happiness levels, because when you show up to an Airbnb, saw a lot of pictures, saw some reviews, but it might not be what you expected.
Right. I mean, you go on there and it shows you that the home is $200, and then when you go to check out, it's like $500 because there's a $300 cleaning fee or different fees. It just doesn't make sense. Again, for 1 week, it can make a lot of sense, but for 2-3 nights or one night, it doesn't make sense for the most part. And I absolutely agree. I think interest rates are going to hurt this because, I personally, I've got friends that were considering buying some properties in South Florida and turning it into an Airbnb. But, with interest rates, everything changed a little bit. And like, you know what? With the way the market's moving with the consumer on Airbnb and that, it just doesn't make as much sense anymore. I think so the fact that they don't own these can kind of cut both ways. I mean, if there's less people offering them, they're going to make less money. So it does, the asset light model is great, but it's also can be a hindrance in the future if there's less properties available. So yeah, I agree completely with everything he says, Tom, as far as the frustration of the consumer, and you can see it in the happiness. It is super crystal clear as far as which one people prefer. But Kevin, I get your point. It's a cash cow. It's just making money. It's middling. But at the end of the day, it's also just software. So the competition is much more fierce for that. I mean, if someone comes out with a better mousetrap, Airbnb, the model could be in trouble, and there's always going to be people coming after them. Whereas Hilton and Hyatt and Marriott, you can't just code your way into having a new building in the good location. That asset is there to stay. So as an investor, I think that the hotels are a lot safer, a lot smarter, and that's what the consumer wants. If you're looking for fast growth and you think our data is wrong on Airbnb, I get it, go for it. But I just see the consumer moving away from that choice so far, and everything that we've got says that. Now, if in the future everything moves the other way and all of a sudden Airbnb, the fees come in line, and now the houses are better taken care of and it's just a better experience and happiness is now up to 75%, I'll be the first one to say, all right, Airbnb looks good from here. But we go with the data, and right now it's weak.
Yeah.
By the way, there's a bar in my Airbnb. It's called The Fridge.
And it's cheaper.
Exactly.
Hotel bars are expensive. All right, great stuff, great data as always, Landon. Appreciate it.
Love it. Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data. One thing I didn't bring up to him, because I don't know